Okay, good afternoon, everyone, to our afternoon session. It's 1400 Ukrainian time. I'm today's session, for this session, the session chair. My name is Jan-Hendrik Meyer, and I would like to invite all participants to write their questions about to the presenters into the chat or raise their hands in the aftermath of the presentations. I already see on my screen our first presenter. It is Andriy Bielinski, and the topic of his talk is correlational and non-extensive nature of carbon dioxide pricing market. Andrei, are you ready to present?
Yes, do you hear me?
Yes, wonderful.
Okay, so do you see my screen?
Yes, but it's not yet in presenter mode. Yeah, now it is.
Okay.
Then the stage is yours.
Okay, thanks a lot. So, good afternoon, dear listeners. My name is Andriy Bielinski. I'm a student of Kryvyi Rih State Pedagogical University from Computer Science and Applied Mathematics Department. First of all, I would like to thank the organizers of the conference for such a wonderful organization of the conference, a high quality review, and such attention to the quality of the published papers. We've been presenting our papers for 4 years in a row, and we really like this conference. And the number of citations and readers and participants indicates that you are on the right track. So today I would like to present you our study, which is titled as Correlational and Non-Extensive Nature of Carbon Dioxide Pricing Market. Before I will start, I would like to present you a plan of my presentation. First of all, I would like to give an object and topic of our research. Then I want to present the concept of statistical entropy of Boltzmann and Gibbs, and following from it, a non-extensive statistics and its instrument, which is known as Tsallis triplet. After it, I would like to present you the random matrix theory, which will give us necessary indicators estimated over multiple carbon time series. Each of our approaches will be followed by corresponding empirical results. Then I would like to give some conclusions from all of these approaches. So, achieving sustainable development is arguably the most pressing issue of our time. One of the main reasons is the simple fact that we have no other viable choice. Today, hundreds of indicators and indices of sustainable development have been developed and used at the global, national, and local scales. And each policymaker should have knowledge about the current state of energy and sustainability in their country and other countries in order to help alleviate the problems and develop the country. They must also have a conscious and balanced choice in terms of sustainability indicators so that they can provide development and operation conditions for their country. Thus, indicators that are based on complex systems theory can be used as a strong tool in the hands of policymakers to assess the level of sustainability of different areas and energy sectors and activities. So again, the object of our research is carbon dioxide and stock markets. And the instruments which we are using is the non-extensive statistics and random matrix theory. And the relevance is identification of crisis states and search for new approaches for modeling critical events. Further, the daily prices of carbon regarding carbon emissions futures time series for the period from 4th July 2008 to 10 May 2021 are analyzed. Moreover, the dynamics of emissions is dependent on the economical situation of a specific country and the whole world. in order to present a more comprehensive technical analysis of the certain drops in the carbon emissions market. For comparison, the Dow Jones Industrial Average Index is selected because it's considered the most quoted and the most reliable financial barometer in the whole world. The Dow Jones data were obtained for the same period. And for the study of correlational processes in the carbon dioxide emissions emission markets, we used the daily data of the power sector from the US Carbon Monitor for the period from 1st January 2019 to 10 May 2021. It contains other most active emitters of carbon dioxide, including individual countries such as USA, Germany, China, India, United Kingdom, etc., and global emissions across the world. Here we calculate our indicators for standardized returns and its modulus. So the non-extensive statistics that will be presented later were preceded by classical Boltzmann entropy, which was later modified by Gibbs. And Boltzmann-Gibbs statistical entropy and related classical statistical mechanics are extremely useful tools in the study of a wide range of simple systems. And these physical systems, for which, of course, it's advisable to use classical statistics and the theory developed on its basis, can be conditionally characterized by an additivity of noise, the presence of intense chaos, Euclidean geometry of the phase space, and short memory or local interactions between the elements of the system. And actually, also its dynamics is very similar to normal Gaussian. And such systems really well described by the additive Boltzmann-Gibbs entropy and classical statistics. But there is, however, a whole range of natural, artificial, and social systems in which, in contrast to those mentioned above, there are systems that are characterized by a long range of spatial temporal correlations, multiplicativity of noise, hierarchy, or usually multifractality of the geometry of phase space, and non-Gaussian dynamics. Therefore, later, the Brazilian physicist Constantino Tsallis derived non-additive entropy and the corresponding function of the q logarithm and q exponents. And Tsallis found that complex non-extensive systems that have inherent correlations can be described by the q-triplet, namely by q sense, which identify chaos in the system or sensitivity to initial conditions, and q exponential divergence of nearby trajectories. Also, Tsallis identified q relaxation, which describes the relaxation of correlated values, and q stationary, q start, which determines how much the probability distribution deviates from the normal, or in other words, how heavy the tails of this distribution appears to be. We can see that for the system close to the normal distribution, all three parameters must be approximate or equal to 1. But if the system appears to be non-extensive, then the presented relation must be executed. So in the works of various authors, systems of different nature were studied, such as stock indexes, different biological systems, seismic systems, and space systems. And it was actually determined that almost all of them can be presented and can be well described by non-extensive statistics. Before I will present empirical results, I would like to shortly describe algorithms for computing corresponding parameters. First of all, here we have q-stationary calculation algorithm that determines the length of the tails of a probability distribution. So for each calculation, first we need to define the difference between the current and previous values of the signal. Then we calculate the histogram for them and normalize it. And after the values of the histogram are substituted to the q logarithm, we try to find such value of q that the values presented on this graph are linearized as possible, or in other words, we try to find the coefficient of determination of the calculated linear regression to be as close as possible to 1. And in the future, the selected value of q will act as q start, which we substitute for the q-Gaussian. So from this slide, we can see empirical distribution of CO2 time series. We can see q-Gaussian, and we can see a standard Gaussian distribution applied to our data. And as you can see, our power law or q-Gaussian distribution in this case is much more suitable for such signals comparing to usual Gaussian distribution. And actually the same we can see for our Dow Jones index. So here we can see q relaxation, which for most real systems determines the q exponential rate of correlation decline. And it can be determined using autocorrelation function. Also, we try to use mutual information instead of autocorrelation function, but for our task, there wasn't so much difference between autocorrelation and mutual information. So we stopped on autocorrelation function. And the procedure for calculating it is similar to q-start, except that we substitute the value of the autocorrelation function for the q logarithm. And the presented slide shows autocorrelation plot for standardized returns and volatility, or module of standardized returns. And volatility in our case follows power law. So as it was proposed by different studies, we should compute q relaxation for exactly volatility, or modules of standardized returns. So the presented slide shows a formula for calculating q sensitivity, or q-sense, which determines how chaotic the system we are studying appears. And Tsallis found that the alpha mean and alpha max values, which define the ends of the multifractality or singularity spectrum, can be used to identify chaos in the system. Actually, multifractality is the characteristic of the system to have the spectrum of different fractal dimensions. And the corresponding alpha mean and alpha max values from multifractality spectrum they were obtained using multifractal determinant fluctuation analysis. So in this slide, we can see a table with the characteristic exponents for the whole time series of CO2 and Dow Jones Index. And as we can see, for the whole time series, actually our relation doesn't fit. So here we can see that we should have q relaxation bigger than q start, but we have here the opposite. So actually for CO2, non-extensive statistics may be not very suitable when calculating it for the whole time series. But as we can see for Dow Jones Index, we have such relation. So definitely q relaxation is much bigger than q start, and q start bigger than q sense. So for Dow Jones Index, this relation confirms. But in for our task, we use sliding window approach to consider non-extensivity not for the whole time series, but across the time. So we calculate all procedures for different subsets of our time series to track how non-extensivity actually changes across different times. And here we can see corresponding empirical results of Q start for CO2, for Dow Jones. Here we can see Q relaxation for CO2, and for Dow Jones also. And here we can see Q sensitivity for CO2, and here for Dow Jones. So the next is random matrix theory. And random matrix theory, with this we can define how differ our signal from completely random, or how correlated to other energy markets and how collective their behavior. In our case, first of all, we construct correlation matrices of initial databases that is presented here, and for the shuffled or random matrices. And in this slide, we can see how some of the countries and the energy markets are correlated. And then we can apply sliding window procedure, find averaged correlation coefficient, and study the dynamics of energy market across the world. Also, we can look at the distribution of the pairwise correlation coefficients, and we see that the most of its parts differ from those for random matrix. So we can conclude that CO2 emissions of different countries are presented to be significantly correlated. And using such tool as RMT, we're mostly interested in the statistical properties of eigenvalues and eigenvectors. And from it, we know that the probability distribution of the eigenvalues for random matrix is presented by the following equation. So in further, we will compare the probability distribution of eigenvalues of initial databases and of the random. So in this slide is presented the distribution of the initial databases comparing to the distribution of eigenvalues of the random matrix. And we see that eigenvalues of initial carbon market is far away from the random. Also, we are interested in such measures as inverse participation ratio and absorption ratio. And these measures can help us to define how many components participate in each eigenvector. Low inverse participation ratio will indicate that all assets move in a similar fashion, responding to the overall trend of the market. In contrast, a large inverse participation ratio would imply that the factor is driven by the dynamics of a small number of assets. And AR is a cumulative risk measure, which measures the fraction of the overall variance in returns explained by a subset of RMT. And we can see the evolution of each eigenvalue across time and rolling window dynamics of inverse participation ratio. For our task, we will use the largest eigenvalue as it gives us much more information comparing to others. And for the last slide, we can see that the dynamics of participation ratio, lambda max, and absorption ratio, and the dynamics of the water emissions. And empirical results present that in time of COVID, 3 indicators were increasing, which indicated about more collective response before the pandemic. So thus, it can be determined that the nature of carbon dioxide pricing market and its crisis states appears to be actually non-extensive in some way. And definitely CO2 and Dow Jones are characterized by long memory or long spatial temporal correlations also they're characterized by long tails or heavy tails in their distribution. And definitely there are plenty of research which we need to do. But the most prominent is that we need to define actually another parameters that can be included to this triplet, because definitely systems are not also characterized by multifractal characteristic or by correlations or by heavy tails, but also by different other parameters. So also in our further research, we are going to combine our methods that we use here and such methods from machine learning, deep learning, or maybe even quantum mechanics, quantum informatics. So thank you for your attention. Would be glad to answer your questions. Thank you for your attention.
Thank you very much, Andre. Are there any questions from the auditors, auditory, from the participants? So maybe you take a little time. Nevertheless, Vitaly and me had the same idea. I would like to know, are you really interested in CO2 emissions, carbon dioxide emissions, or are you interested in the math of your methods that you use? Because you have to decide if you really want to come to a publishable result. You need to decide whether you follow this path or this path. That's extremely different, you know. If you want to write a methodological paper, you don't need necessarily any data for that. But if you want to research CO2 emissions, probably you should more focus on the research of your research question. So what determines the price of CO2 and lesser the math.
Mm-hmm.
Nevertheless, what Vitaly and me wanted to know, there are a lot of standard models that are used in today's econometrics to do the research of time series, just like you did. Vitaly mentioned ARIMA and moving average stationary and non-stationary time series. I mentioned some vector autoregression and Granger causality test. And they are applied millions of times in the literature. And you do something completely different. So what is the advantage of your methodology towards or in comparison to those standard models?
Thank you for your question. Well, as I mentioned, different studies were applied to different systems and especially to financial systems. But I think the main part of these indicators, the advantage, is that they were applied to different systems, not only financial, but for natural, for physical systems. And they presented themselves as very prominent and very reliable. And people using such approach could characterize how presented to be the system, and they could identify different critical events, especially in seismic, where we have such shakes in Earth. And definitely we shouldn't forget about standard econometrical approaches, and we shouldn't forget about standard indicators that are presented on different exchanges. In my opinion, we should combine them, and these approaches, their applicability to different systems, their universality, that's the advantage. And in my opinion, the combination of these indicators and already approved and used every day, I think that they can give the most fruitful results in further. Definitely, here we should think about also, I think, some trading strategies that are relied on these indicators, because there are a lot of work to do, actually. And as I said, except just only those indicators, we should apply methods from machine learning and deep learning to make forecasts, to know at which time we should expect crisis, because we know that our system is presented to be more heavily tailed, or presented to be more correlated, and we know that we should expect crisis, but when we should expect it, at which point of time. And that's why we should use another approaches to confirm and to make our forecasts more reliable in further. So this indicators is much more like additional feature to our trading, to our decision making.
Okay, Vitaly, did I fully reflect your question? Okay. I wrote another question into the chat. The emission futures that you use, are those futures on the European emissions or futures on what emissions?
So, yeah, as I said, we use a database from US Carbon Monitor, and there are emissions from different sectors, from United States, Germany, India, from different countries, almost 20 or 40 countries, as I remember, approximately 40 countries. And except it, there are also such as global indicator of world emissions, so combined emissions from different countries. So except individual countries, we use indicators that combine emissions from the main countries, the most developed.
Okay, but I can see their carbon emissions future in your footnote there. So futures are derivatives on special financial instruments.
Actually, sorry, I actually don't remember, and I think if to look in investing.com lately, we present a database in we presented link in our paper, so if people are really interested, they can look at this link and look from to which country it's related.
Okay. Are there further questions? I see that it is not, seemingly it is not the case. I don't see any raised hands. Then thank you very much, Andre.
Thank you very much.